We want to bring in Dennis Lockhart, a former president of the Federal Reserve Bank of Atlanta, to get his take on what we're hearing from the Fed. 75 basis point hike here for the second month in a row. Dennis, what's your reaction to that? Is it aggressive enough from the Fed?
I think it's pretty aggressive. They've managed to front end the removal of accommodation that was needed to try to bring inflation under control. They're now in the zone of what they consider to be neutral, the estimates of neutral. And in all likelihood, we'll see more rate hikes in the fall. So I think this is quite aggressive, actually. And 75 basis points was widely expected. As your reporters have pointed out, the market reaction so far, at least, is not severe.
Widely expected and unanimous. What do you want to hear from Jerome Powell, Dennis?
Well, let me tell you what I expect to hear from Jay Powell. I expect him to emphasize the resolve of the committee to bring inflation under control and move it toward target. I think he'll also mention, as he always does, the uncertainty environment in which they're operating. There are some questions out there about the potency of the Fed's tools, given some of the causes of inflation. I think he's going to be optimistic about that. He's going to say something to the effect that the tools are designed to bring down aggregate demand, and they can do that with rising supply and bring supply and demand into greater balance.
And obviously, this is coming on the heels of a lot of mixed data that we're seeing. They mentioned in that statement some softening of production, also on the consumer, but consumer spending still going strong when it comes to employment as well. How should the Fed really digest all of this when they're trying to plot their next move?
Well, you're absolutely right. It's a hard synthesis at the moment because you have some mixed signals, it seems to me, that are being thrown off by the economy, and putting the total picture together isn't so easy. I took a look at the statement that came out at 2 p.m. It's sort of a minimalist statement in the first paragraph where they typically characterize their view of the economy. And that may be the best posture to take at the moment because it's hard to add all of this up. I think in the press conference, Powell he'll get some distance from the view that we are in a recession now. I don't think he's going to support that point of view. But at the same time, he's going to say this is an economy that has both positives and negatives at work. And for my part, it's hard to add it all up.
Dennis, how much hiking can the economy absorb at this point?
Well, given the employment market situation, which is really very strong, one of your earlier guests commented on that, I think the economy can absorb higher interest rates. And this is me speaking, you'll never hear this from a Fed official, can absorb a modest recession in order to get inflation under control. A lot will depend upon how the employment picture evolves. But right now, the Fed has got a lot of air cover from a very strong employment picture.
Yeah, a position of strength, as we discussed earlier. Look at that unemployment rate, historically low, 3.6%. So with the exception of the housing market, which is certainly begin to showing some signs of cooling, are you seeing any signs that the Fed is actually winning, that they are bringing down inflation? And when will we see that number start to go down?
Well, so far the data, which of course you're looking at with a lag, don't show much that's very encouraging. The headline number last month for the CPI, or a few days ago for the CPI, was pretty awful. And the core numbers were sort of flat for the last 3 months. I do think that the next cycle of inflation numbers will show a decline in at least the headline because of the gasoline prices and energy prices coming down. They'll take some encouragement from that, not too much because it's a volatile element, but I think there are signs that maybe at least in the near term we'll see somewhat better numbers that will help the psychology around inflation. But so far, not a lot of indications of prices declining or the rate of inflation declining.
And Dennis, obviously, rate hikes, one part of the picture, but also the Fed tightening its balance sheet. Do we expect to hear anything about that? Or what are your expectations in that regard?
Well, I think this question will come up in the press conference. At this stage, it's still very early. It's only been, 7 weeks of the quantitative tightening policy being in force. So I don't think the committee has any desire to change the policy in the near term. And they've said several times over the past few months that they really want to put this in the background, that the primary tool is the federal funds rate. I don't think they're going to come off of that in the near term. Maybe at an upcoming meeting, they'll sort of review how the program has worked so far and make some adjustments later, conceivably later in the year. But for now, it's on autopilot.
Dennis, real quick, we only have about 30 seconds here until Fed Chair Jay Powell's press conference gets underway. But when do you expect to see inflation moderate a bit?
Well, as I said, you'll get a little better number, I think, in the headline number in the next cycle, whether that's this Friday or a month later or in the middle of August with the CPI. I think you'll probably see a better headline number. That's not something I think the Fed can take to the bank because it's just a volatile element, and there are a lot of geopolitical risks that could create another energy spike in the coming weeks or in the coming months. I think it's going to take a while. I am concerned that the longer and more persistent.
Dennis, apologies for jumping in here, but we have Fed Chair Jay Powell taking the stand. Let's listen in.